The groundwork is being laid for the melt up. It's not only raining dollars, it's raining euros. Here to discuss the European Central Bank's latest policy decision, Scott Garliss, the editor of the Stansberry Newswire and a frequent guest. Welcome to the program.
Thanks for having me.
Always good to see you. So ECB Chief Christine Lagarde giving a press conference on Thursday saying investors, look, the printing presses are going into overtime in Brussels, bringing the total European stimulus now to more than 3.6 trillion US dollars. Listen.
We decided to continue conducting our regular lending operations as fixed-rate tender procedures with full allotment at the prevailing conditions for as long as necessary. The monetary policy measures taken today will contribute to preserving favorable financing conditions over the pandemic period, thereby supporting the flow of credit to all sectors of the economy, underpinning economic activity, and safeguarding medium-term price stability.
So Scott, what's the headline for you here?
Yeah, look, they're increasing asset purchases by 500 billion euros. That's a lot more money coming into the financial system. They want to make sure liquidity is super ample. That is going to inflate asset prices, stocks, bonds, gold, cryptocurrencies, artwork. Prices are going higher.
Overall impact on American investors invested in the S&P 500, your take?
Yeah, look, the Federal Reserve is going to do the same thing. These guys talk, very coordinated policy going on. The Fed meets soon. They're going to talk about putting more money into the system if they don't do it outright. So that's going to drop the dollar more. I don't know if it's a race to zero, but it certainly feels like it. And again, that's going to inflate asset prices here in the US as well.
So the groundwork is really being laid for a melt up. We've had this thesis for over a year now from Steve Sugarud, one of our colleagues at Stansberry Research. But when do you think it really takes off, right? Because it's the liquidity is the first ingredients, but then you sort of need an open economy for everybody to want to spend again. So does that come in the next year, in the next 2 years? Is it when we are completely vaccinated or just partially vaccinated? What's your take?
Yeah, look, if you're a retail investor, you want to try to think as a money manager every time you buy a stock, bond, whatever. When you're investing, you need to think with a long-term horizon. So money managers are always trying to look at what the economy is going to look like in 8 to 10 months. So with a vaccine, that means people can go back to resuming more normal everyday activities. So you want to be investing now for what's going to happen then, because if you wait until what's going to happen then to invest, you're going to be too late. So you want to get in now or soon so that you can be part of that wave of others that are going to be late to the game. So I think in the next 6 to 8 months, you're really going to see things start to pick up, and that's going to be really good for the stock market.
All right. And European exposure, a key to this, right? Because their pandemic has actually been worse. Do you see that actually prolonging the stimulus plan in Europe, maybe giving even more length to the melt up as a result?
Definitely. I think central banks have learned from mistakes they may have made after the financial crisis, when they may have pulled back too soon on things. So now there's going to be a propensity to leave stimulus in place longer, and that's going to be more support for the financial system. What's going on with the Treasury and the current administration versus the incoming administration, just politics. But when Biden and his team take over in the White House, they want to introduce a lot of stimulative measures to be able to say they got the economy going again. So they're going to be pumping even more liquidity into the system, and that's just throwing fuel on the fire.
All right, Scott Garliss of the Stansberry Newswire. Where do we find your stuff and your latest analysis?
Yeah, stansberryinvestor.com. Please come in and check it out. You can see all of our free stuff that we're putting out there every day. You can see all of the paid content that others are producing as well. And you can sign up for all of our free letters.
All right. Thanks again for joining me. Good to see you.
Thanks for having me. You too.
And if you'd like to see much more content like this, please subscribe to our YouTube channel. You can also find us on Facebook, Instagram, LinkedIn, and Twitter. That's all for now. Thanks for watching. I'm Jessica Stone.